Hi dear students. This is Raju sir, subject of commerce. So today I am going to explain about one of the important topic in the junior commerce, that is to be 20 marks problem. Okay. So the chapter name is to be called preparation of final accounts. Preparation of final accounts with adjustments. With adjustments. Actually, this is the topic which is most important to the not only in your intermediate education, in further whatever you are going to do the commerce courses, this is the topic to be important up to your PG education like MBA, MCom or BCom, whatever it is. So in every commerce topic, when you are going to read in further, this is to be most important one. Okay. So in this class today, in this class, we are going to discuss about what is the importance of this final accounts. Okay, right. Let me start now. Listen everyone. Okay, right. Let's say actually final accounts. So any businessman or an accountant have following the some accounting procedure. What is the accounting procedure? Actually, accounting procedure or accounting cycle. Accounting procedure or accounting cycle is also we call here accounting procedure or accounting cycle. This is to be begin by the businessman. Okay, na? Accounting process actually begins with journal entries. This is the first stage in the accounting process. The accountant beginning the accounting process with journal entries. These journal entries are actually posting into the ledger. This is the second stage in the accounting process. And after he prepare all the ledger accounts, these all ledger account balances are to be recorded in trial balance. Trial balance. Okay. Then the trial balance is the base of preparation of final accounts. Okay, already before the final accounts, we discussed about the trial balance. What is the trial balance? Trial balance is nothing but it has been summarized statement. Summarized statement of all accounting information means all 1 year accounting information. All 1 year accounting information be recorded in the trial balance. By base of the trial balance, now we are going to prepare final accounts. So for preparing the final accounts, the base is nothing but trial balance only. Okay, so by based on the trial balance, now we are going to prepare final accounts. Let's begin the class. Let's begin the importance of final accounts. Let's see. Actually, what is the final accounts here? Why it has been prepared by the businessman? Let's see. Final accounts are prepared by an accountant or businessman, an accountant of the businessman at the end of the accounting year. At the end of the accounting year. Yes, we know that accounting year, it must be have 12 months. Accounting year, it must be have 12 months. The 12 months may be, yes, some of the businessmen starting their accounting process from January 1st and closing the accounting process on December 31st. Right. Just right. January 1st, December 31st. So some of the businessmen who started their accounting process from January 1st and closing their accounting process on December 31st. Okay. So these kind of the businessmen prepare the final accounts on the date of December 31st. Okay. And one more accounting year also to be followed by the businessmen. So some of the
Sir,
businessmen who followed the accounting process from April 1st and closing their accounting process on March 31st.
sir, Raju, sir.
April 1st and closing the accounting process on March 31st. Okay, so this is to be second accounting year. Okay, so prepared by an accountant of the businessman at the end of the accounting year. The accounting year should be 12 months. These 12 months may be from January to December, one accounting year, from April to March, the second accounting year. Okay, so why these are prepared by businessman? What is the significance? What is the significance of this final accounts here? Significance. Significance means the importance of the final accounts. Why the businessman prepare these final accounts? Actually, these final accounts are prepared by businessman for two reasons. Two reasons are behind of this preparation of final accounts. What are the reasons? The first reason, to ascertain or to find out. Okay, to ascertain. Ascertain means find out. To ascertain profit or loss at the end of the year. Profit or loss at the end of the year. To find out profit or loss at the end of the year, one accounting year. And second reason behind the preparation of final accounts are here to ascertain the financial position of the business. Financial position of the business. Yes. So what is the position of the business? To find out the financial position, to find out the profit or loss at the end of the accounting period. So for these two reasons, basically, the businessmen prepare the final accounts at the end of the accounting year. Okay, right. So profit or loss means it is nothing but to be called as result of the business. What is the result? Suppose we take the student's point of view. Student point of view, what is the result? Either pass or fail. So to the business point of view, what is the result? The profit or loss. Okay, so that's why to find out the results of the business, the businessman and accountant prepare the final accounts at the end of the accounting period. And financial position means what is the position of the business? What are the liabilities? What are the assets? And what is the condition of the business? It is better to continue for the next year or better to close for the next year, or whatever the changes are going to be making into the business. These all are to be decisions are based on the financial position. So future decisions so are to be depending on these financial statements. The future decisions of the businessman regarding to the business depending on these financial statements. Okay, right. Okay, yes, we know the importance of final accounts also. Okay, so when the final accounts are prepared every 12 months, that 12 months may be January to December 31st and April to March 31st. And what is the importance? To find out the profit or loss or the financial position of the business. For these two reasons, basically strongly, for these two reasons, actually the businessman prepare the final accounts. Okay, and comparison, this is also one of the point to be in the mind in the businessman is to be compare the results of this year to the previous years. Compare the result of this year to the previous years. That's why this is also the one of the reason to prepare the final accounts in the business. Okay, comparison of the results of the business. What is the results of the previous year? What is the results of the current year? So to find out, to know about this, actually the businessman is preparing the final accounts. Okay, yes. Next, actually, how many stages the final accounts are prepared? Okay, the next topic here, how many stages? How many stages in final accounts? Right. Actually, the final accounts are prepared in 3 stages properly in any business concerns. In any business concerns, actually, the final accounts are prepared in 3 stages. They are: first one, trading account; second one, profit and loss account; third one, balance sheet. Third one, balance sheet. So in these three stages, the businessman prepared the final accounts to know about the results of the business and the financial position of the business. Okay, right. So before we are going to prepare this, yes, trading, profit and loss account and balance sheet. Actually, the total expenses of the business, the total incomes of the business, okay na? It has been divided 2 times. Yes, before, the businessman and accountant prepare these accounts. Actually, the accountant divide the expenses of the business, divide the expenses or payments of the business 2 times. Yes, first he divide the expenses, and as well as same he divide the incomes also 2 times, incomes or receipts. Yes, so he divide the total expenses, incomes 2 times before he is going to prepare the final accounts of the business. Yes, let's see what are the expenses. The expenses are divided here 2 types. It has been: one is revenue expenses, second one is capital expenses. Revenue, capital. Incomes also to be divided here: one, revenue; second one, capital. One, revenue; second one, capital. Okay, right. Let's see. So, what is the meaning of revenue expenses and what is the meaning of capital expenses as well as the incomes, revenue and capital? Okay, let me explain. Listen, it is very simple. It is very simple. Revenue expenses means the expenses which gives less than 1 year benefit. The expenses which gives less than 1 year benefit. Less than 1 year benefit is called as revenue expenses. Okay, means these expenses, the benefit duration is less than 1 year. Means, suppose, what is the examples? Plenty of examples are there. So many expenditures which give less than 1 year benefit in the business. Yes, and the revenue expenses also to be called as recurring expenditure. Recurring means regular expenditure. Regular expenditure, recurring or regular expenditure also to be called. Okay, so whatever the expenditure paying regularly, okay na, and repeatedly, these all expenses to be called as revenue expenses. Suppose take some examples of these: purchases, okay, wages, salaries, rent, etc. Plenty of the expenses are to be part of the business. These all are to be called as revenue. When the expenses which gives less than 1 year benefit, these all expenses to be called as revenue expenses. Then come down to the capital. As dear students, come down to the capital expenses now. Right. What is the capital expenses? Nothing but the expenses which gives more than 1 year benefit. More than 1 year benefit is called as capital expenses. Yes, and one more definition also there to their capital expenses. What is that? The expenses which increases earning capacity of the business. earning capacity of the business is called as capital expenses. Right. Okay. For example, actually, simply we take one example is buying the assets. Buying the assets. Assets means land, buildings, machinery, furniture, motor van, loose tools. These all are which gives more than 1 year benefit. Okay, machinery is furniture, loose tools, okay, motor van, etc. So finally, the meaning of capital expenses is nothing but the expenses which gives more than 1 year benefit. That is the expenses to be called as capital expenses. Okay, is it clear, students? Yes, very good. Revenue expenses, capital expenses is the expenses of revenue which gives less than 1 year benefit. The expenses of capital which gives more than 1 year benefit. Okay, come on, students. Let's come down to the incomes now. Yes, incomes. So incomes also the accountant has been divided here two types: incomes or receipts. Okay, right. Let's see. Incomes also divided revenue and capital. Yes. What is the meaning of revenue income? The income which comes to the regular course of actions or source of actions is to be called as regular course of actions is to be called as revenue income. Right, means regular incomes also to be called. So when the incomes are comes to the regular course of actions, regular source of actions to be called as revenue incomes. For example, sales is the main income sources to the business. That is the regular income. That's why it is to be considered as revenue. And received interest, received discount, okay, received commission, etc. So when it comes to the regularly, these all are to be called as revenue. As let's come to the capital now. Okay, what is the meaning of capital expenses here? Let's see. The incomes which comes to the irregularly, the incomes which comes to the irregularly is called as capital income. Best example of these, simply we could say liabilities. As what are the liabilities? Capital is the capital income. Okay, and bank loan, as if any loans are taken from the bank, that is to be called as the capital income. Overdraft, creditors, okay, bills payable, these all are. Yes, okay, the benefit of income which is more than 1 year. So this is to be also to be called as capital income. Okay, right. So we divided, the accountant is divided, expenses are two types, incomes also two types, right? Where it can be recorded, let's see. Okay, already we knew that. So final accounts are prepared in 3 stages. Let's see. First, trading account and profit and loss account. The both accounts are actually nominal account in nature. As students, you know that nominal account principle. What is the nominal account principle? Debit all the expenses and losses, credit all the incomes and profits. That's why the trading and profit and loss account is based on nominal account in nature, nominal account. So in these two accounts, records debit all the revenue expenses and losses. Debit all the revenue expenses and losses. Credit all the revenue incomes and profits. Right. So trading and profit and loss account records all the revenue expenses and revenue incomes. And one more statement, okay, now part of the final accounts, that is to be balance sheet. Balance sheet records capital incomes on the left side of the statement, left side of the balance sheet, and capital expenses on the credit on the right side of the balance sheet. Yes. Okay, so means after the trial balance is prepared by an accountant, he divided the expenses as revenue and capital. After then then revenue expenses are to be recorded in trading and profit and loss account debit side, and revenue incomes are to be recorded on credit side of the trading and profit and loss account, and capital expenses and incomes are part of the balance sheet. Okay, right. So this is the stages to prepare the final accounts. Let me rewind again. So simply I give the brief meaning at the end now. Before I'm ending the class, before I'm going to end the class, just I give the briefly I explain what we discussed today. Right. Accounting procedure. Final accounts. Okay, now the final accounts, actually in every business, every accountant has to follow some accounting procedure. The accounting procedure of cycle begins with journal. Journal entries are posting into the ledger. Ledger balances are to be recorded in trial balance, and the trial balance is the base to prepare the final accounts. Right. Then final accounts, when it has been prepared by an accountant, actually it has been prepared by an accountant for every 12 months. The every 12 months may be from January to December 1 year, and April 1st to March 31st the second accounting year. The businessman can choose any year to prepare the accounts. Right. Why these final accounts are prepared by businessman? Yes, basically the strong two reasons are there. One is that to find out the result of the business, and second one is that to find out the financial position of the business. Then how many stages in final accounts? 3 stages: trading, profit and loss account, balance sheet. To prepare these final accounts, base is the trial balance. In this trial balance information, accountant is divided as a 4 types. Expenses are 2, incomes are 2. Expenses to revenue, capital. Incomes are to revenue, capital. Okay, so we already discussed the meaning of revenue expenses and capital expenses, and revenue incomes and capital incomes, where it can be recorded. Yes. Trading and profit and loss account. It is the nominal account in nature. Okay, so in the trading and profit and loss account, debit all the revenue expenses and losses, credit all the revenue incomes and profits. In the balance sheet records capital incomes on the left side, capital expenses on the right side of the balance sheet. Okay, so this is the basic information to prepare the final accounts. Okay, thank you guys, thank you students. In the next class we are going to discuss about some additional information, okay, now about these final accounts. Thank you all, meet you in the next class.